thank you enough for tuning in once again, this time to my 2488th edition of Short-Term Trading Live with Oscar Carboni. Traders, it is Fed Day number 2, decision day on Wednesday, and it's going to be dynamic, it's going to be volatile, and you need to know, do not trade without stops. Make sure you recognize that this is a very risky game. Put those stops in first before you trade. So if you panic when news comes out, the market will knock you out anyway. That's what the stop is for. All right, traders, so let's get moving. For trading on November, and we're out of Rocktober. Hooray, hooray, hooray. Finally, we're in November 2nd, 2022.
You didn't change the date number.
Oh, I did not. Look at that. It says 10. November's 11, not 10. All right, so Rocktober's gone, and we are in November 2nd, 2022. While we're changing things, crypto, my Bitcoin target in 3 years, 6 months to go now. 3 years and 6 months. Let's do it in blue. 3 years and 6 months, and Bitcoin will be at 85,000 according to the analysis that I do. Now, the last time I did analysis like this, Bitcoin had never been past 18,000 in its life. And it was around 10, 12,000, and I did a projection, 5-year projection for 35,000 Bitcoin. Within the 12th month of the 5th year, it went right to 35,000. It blew up past 19, 21, and went right to 35. And I went, projection worked. So, of course, I recalculated, took my profits, recalculated, came up with another 5-year projection at 85,000 Bitcoin. We've got 3 years and 6 months to go. We'll see what happens. All right, so what's going to happen on Fed Day? Well, if you ask me, this looks like a good old-fashioned Wall Street setup in the Dow, the bonds, and U.S. dollar index, or the dollars. I'm going to show you the charts, and I think you'll understand why I see this. I grew up on Wall Street since I'm 18. I see the action this week and last week into this week as a good old-fashioned Wall Street setup to sell the market. We'll see what's going to happen tomorrow. Number 2 on the board. Fed meeting ends today, or being that we're doing this video on Tuesday night for Wednesday, the Fed meeting ends Wednesday at 2 p.m. and there is a press conference to follow. Now, everything I've looked at is bearish, and we know that, and the markets, you can tell we've been in the downward swing. We had this rally leading up to a Fed meeting, which is why I'm telling you this is a setup. I'll show you the charts. The press conference to follow. Now, traders, there's only 2 things that could possibly make this S&P go higher. 1, crude gets under $77 and it's not there yet. 2, rhetoric from the Fed that after this rate hike, they'll consider backing off and maybe doing less, like a 50 basis point instead of 75. Either of those 2 things happen, and number 3 on the board kicks in, the wild card. The ES remains above the 200-bar moving average on the weekly chart, and Wall Street has been watching that. So, if there's any rhetoric at all in Powell's press conference, any talk that they might slow down on raising rates, this market, S&P, will go through the roof. We know the other thing is crude getting under 77. We're nowhere near there. We're near 90, so forget that for now. All right, so I am telling you that this is a setup. I'm going to show you the charts. The markets are absolutely going down unless something insane is said at that conference. And the wild card is on the board, but I don't think the wild card will come into play. I think these things are going to knock the S&P down. I've got a red Omni. We are looking for some downside. And traders, the charts are right on the money. They are pointing to an absolute setup. I do not want to waste any time tonight. I want to get right to those charts. Just a reminder, I will be live streaming tomorrow. While the Fed comes out with their decision, make sure you are hanging out with me, and we'll live stream and we'll get through this together. And then, of course, come to livewithoscar.com. It is a free site, and join me in my live free trading room. Now, kids, I want to go look at some charts. I want to tell you quickly about risk, and then we'll look at these charts. Remember this. When you're in a trade, the worst thing you could possibly do is make emotional decisions. The best thing you can do is put your stop in first before you even get into the position. Then say this to yourselves over and over again. Just believe me, it's going to help you when you're in a bad trade. 1, 2, 3. Are you ready? Stop. Stops are in. However, emotions are out. And I mean that. Do not make emotional decisions. Plan the trade. Trade the plan. Join me at livewithoscar.com. And now, let's go look at some charts. Traders, this is why I am telling you that's a good old-fashioned Wall Street setup that we're looking at. Look at how when the market races up to this spot and it hits the 200 bar moving average and it hits this red resistance line that starts all the way back there. Just watch this. It's non-stop action. It gets to that line, it cracks. Gets to that line at the 200 and the red line, it cracks. Well, we're about to have a Fed meeting, and what happens? All the way up right to the day of the Fed meeting. It hits that spot. It's at the average. It's at the line. It is supposed to crack. Supposed to, right? Nothing's 1,000%, so we would put stops in first if we were going to trade anyway, but that is what should happen. Now, when I mentioned two things need to take place to get the stock market to go higher, one would be crude hitting 77, and guess what? This is the day crude hit 77. Right there, it started to bottom. Right there. And away we took off. Then crude started to go higher again. And whatever's going to be is going to be. But that started the rally. Now, we had Wall Street take it all the way up till Fed Day. I say that's a good old-fashioned setup as far as I'm concerned. The downside comes next. Transportation average is no different. Look what they did here. They rallied it all the way up to what I think is the top of a channel. See this bearish channel? They rallied it all the way to the top of a channel and to an average that usually stops the market cold when it gets there, right? They rallied it all the way up to that right before the Fed meeting. And if you ask me, see this channel? I think this channel is a bear flag. That is the flagpole. This is the flag. I think we head back to the bottom of the flag. Omni's bearish. They're getting ready to raise rates. That makes sense to me. And then here's the third, well, I should say the second of the three-part series. You've just seen what the Dow and the tranny look like. They sort of run together. The second setup, 30-year bonds. They run them all the way up from the bottom of this channel to the top of the channel. And the average, see this black average? Look at how well it works. They run it right to there and then settle at the lows the day of an interest rate hike, or the night before, I should say. That means bonds go straight down after the interest rate hike comes out. And then you've got this. Here's the third part of the setup. Dollars. So they rallied bonds up to a spot where if they raise rates, bonds should drop. They rallied the Dow and the transportation average up to a spot where if they raise rates, it would drop. You know what happens when they raise rates to the US dollar? It goes up. Well, look what they did to the dollar. They dropped it all the way down to here. And of course, it's a weekly chart. Now that this week's starting, we're here. And it's a perfect spot to raise rates and have the dollar go higher. So I think that is an absolute good old-fashioned setup in the Dow transportation average, and in US dollar. That's what we've seen. I think that is absolutely what we're seeing now. And when they raise rates, you are going to see something spectacular. And then, of course, everything can be negated if, in fact, rhetoric comes out of the press conference to follow the 2 p.m. Fed meeting today. So when the Fed meeting's over, if Powell comes out and says anything at all about not raising rates as much, because we held the 200, this is the wild card, it would explode. Now, everything I'm looking at does not indicate this, so I'm not calling for this. I'm calling for downside. We will take it one day, one trade at a time. One of the rules at the Omni Trading Academy is that we do not trade on a Fed day, so no matter what happens for Omniacs, we'll be out of the market for trading on Wednesday. Traders, thank you so much. Good luck out there. I am hosting a live Metastock webinar this Monday at 3 p.m. I will remind you again, and I will also post a link below this video so you can sign up. It is free, and I'll be doing an hour's worth of live analysis this Monday for Metastock. More to come.